traders, Akil here, and thank you for joining me for another video. Coming off a pretty slow September, I was excited to see the movement in the market really pick up in October. And I know, speaking for me personally, this past week was one of my best weeks in a long time, mainly because of a massive move we caught on the pound yen. But what I wanted to do today was I wanted to come in and walk you through one of the trade setups that we followed throughout the week. And what I mean by follow throughout the week, if you guys are new, I'm a trading coach over at tier1trading.com, and I work with our traders in many different aspects, right? Not just videos like this, but we have a live trading room where we come in 3 hours a day and we do analysis every single day. We answer questions every single day, and we look for trading opportunities every single day. And one of the habits that I try to instill in our traders is you need to treat your trading like a business. And what that means is that, you're not just waking up whenever, on whatever day, looking at random stuff, right? You're doing everything consistently. You're establishing a routine. You're establishing a ritual. You wake up the same time. You look at the same pairs. You do analysis the same way. And after all, right, consistent analysis plus consistent execution equals consistent results. So what I want to show you in today's video is a trade that we tracked throughout the week and give you a look at really not only how that trade evolved as far as offering secondary opportunities and even third opportunities to get into the trade, but also the lessons that it gave us as far as reading a price chart, as far as trading psychology. So I had to go through about 9 hours of footage. So it's obviously I'm not going to put all 9 hours on YouTube. So it's cut up a little bit. But if you are a member, trial member or premium member on our platform, you can always go back to the live trading room section of the site and watch the full recordings of all the live trading days if you want to kind of get the full picture. But I'll start you guys off with day one, and I'll see you guys in a little bit.
Next, the Kiwi. Gabby would be happy if we're in here. Now, New Zealand dollar, as I mentioned before, very similar setup to the Aussie dollar and Aussie Canada. We're technically in a bearish trend continuation type mode. However, we're just at a level where it's going to be a rocky road going down to previous structure. So it's not smooth sailing like we may see with some other setups. So let's just do 50. But you can see New Zealand dollar is putting in a retracement, right? We have a lower low, lower close, series of lower lows and lower highs. So we know we're in a bearish trend. And we're putting in a pullback right now. If you are looking for a selling opportunity, you're looking to take advantage of this pullback and potentially trade it down to retest previous structural lows and maybe even to the extension lower. Now, if we go down to a 4-hour time frame, you're going to see that we've been ebbing and flowing on the way up. This is a good example. We recently covered this in some Q&A questions over the last month about how we have smaller trends that exist within bigger trends. So you can see, right, if we're just to zoom our chart over here, would you guys say we're bullish or bearish? You guys would say we're bullish, right? If we just do something like this and zoom out, would you say we're bullish or bearish? Bearish, yeah. So it's all about perspective, and that's why it's so important that you do what you're supposed to do in a higher time frame, because it's going to give you that perspective. It's instead of just looking at a certain section of the chart and basing your opinion, you're going to get a fuller look at the bigger picture and what's actually happening in the markets. So we go down to the 60-minute time frame. We are potentially putting in a double top. So you can see we had a high momentum move here. Market has retraced off of that. We're looking to retest previous structure. If we can retest the 65.90s, that's going to give us a double top. That could be a potential entry for a short trend continuation opportunity. Now, you do have the protection of the 66 even handle right here. You have a little bit of structure looking left, so I think above, if you can get above 66.07s, that's going to be the safest place. But this can set up for a decent looking bear setup, anticipating a move back down to really these structure lows right here around 65.50s. So again, like we talked about in forgot what pair it was, but it all depends on your overall analysis. What is your overall view of the market? What do you think price is likely to go? If your prediction is this on a higher time frame, I would take this 100 out of 100 times. I mean, you're looking at what, 6-to-1 risk reward? If you're someone that's a little bit more cautious, maybe you're looking at this level up here, this little structure swap zone. You measure it out, see if it works. If you're looking higher, you measure it out, see if it works. But this is why we want to know the 3 things before we trade, right? What are the 3 things we always need to know before we take a trade? Entry, stops, and targets, right? That way we can measure them out and we can look. And if you're like me, if you're visual, you can draw it on your screen and be like, okay, well, that's bigger than that. That works. Or if you're a numbers person, take the numbers and, do your number thing. But we always want to know the situation before we're involved in the situation. And there was a good book. Any of you guys read the book Pitbull? Not the singer, rapper, musician, artist. It was a great, loved the book, great book. Marty Schwartz said in there, he said he got a message from a famous trader one day that said, 90% of the hard work is done before you ever place a trade. And that means all of the thought, all of the analysis, all of the risk calculation, all of that's done before your trade is ever on the table. That's the hard work. Once you're in the trade, it's easy. Not psychologically, but from a technical standpoint, it's easy. The only thing left to do is maybe manage to trade. But you want to make sure you do all the work before you actually take the trade. Same thing as like for you guys that ever played sports, right? Game planning. Most of the work is done game planning during the week, practicing during the week. On Saturday or Sunday, that's when you just play the game.
So a few hours after our live trading room closed on day 1, I did end up getting entered in the trade. You guys will see that a little bit. And what happened is, as we came back on day 2, we talked about secondary reasons to get involved in the trade. And one of my philosophies on teaching trading is that you want to match trading to really your personality. And I teach many ways to get involved in a trade, from the very aggressive, for you guys that are just kind of gung-ho, get after it, you don't want to wait for anything, to the very conservative. So for you guys that or girls that just kind of want every single safety reason before entering in a trade. And one's not better than the other. They all come with pros and cons, right? You have to sacrifice something in order to do something. In order to do something else, you got to sacrifice this. That's just trading and really life. But it's always cool for traders to see many different opportunities to get involved, because I think a lot of teachers out there say you have to do it one way. If you don't do it this one way, you're wrong. And that's just not the case. So in day 2 of our live room, here's what I want you to pay attention to. 1, the secondary opportunity to get involved in the trade, and 2, the lesson that we did on reading a price chart. And what I mean by reading a price chart isn't in your classical sense like moving average or just like bullish candle, bearish candle, but something I did different this year in my training was I really took a micro look at the market and started sharing with our traders the importance of looking at a candlestick really in its own, right? One candlestick at a time, right? The importance of the close, the importance of the wick, the entire story that it gives us, and how that can help give us an edge in the market. So I think that's a pretty cool lesson that you guys can take from this this second session as well.
Any worth on the 240, but we go down to the 60, and you can see the double top that we got yesterday. Top number 1, top number 2. This ended up being my entry, if you guys remember. We then kind of played around the highs here. We tried the spike above. It got beat down. Followed it up with a lower low, lower close candle. For you guys that have taken the foundation course, are you starting to see the kind of the value in these kind of combos? Yeah, ascending triangle this morning. Yep. Zoop. These combos, being able to read a price chart, being able to read what price is doing is very important, right? No surprise. Market tried to spike up and break out of this ascending triangle. Got beat down. What was our next candle? Lower low, lower close, right? Boom. High momentum breakout candle. Again, buyers flushed out of the market. They gave up. They gave up. We broke these lows right here. Boom, they gave up. No doubt you're seeing some stop orders triggered as well. Think about it like this. We haven't done this exercise in a while, but if you're buying and you need to get out of something, what type of order do you have down there? If you're a buyer and you try to buy it up and you're getting excited and then you get beat down, now you're getting scared, how do you get out of your buying position? You sell. You see those high momentum candles, it's a flood of sell orders by both the buyers and the sellers at the same time. Flush. And now what have we recently done here? We've recently put in a lower low, lower close. So technically 2618 traders can get ready. You can drag on your Fibonacci. Look for a return to the 618. Obviously that zone between the 618 and the highs if you're kind of a classic 2618 trader. And look for a secondary opportunity. Aside from that, was there something specific you want to look at, Davey? Mini head and shoulders maybe here on the 5 minute. Yeah, little mini head and shoulders here.
All right, so in day 3, we're actually gonna have a third opportunity to get involved in this trade, right? 3 opportunities. Unfortunately, if you would have taken the third opportunity, and I'll explain why in the session, why I wouldn't have done it, you would have been skunked out of the market. But I want to share this portion with you because we had a very good discussion on trading psychology. And here's something that typically happens during the week, right? So remember that we're watching this trade for 3 days straight, right? We have Tuesday, we have Wednesday, and then we're about to come in on Thursday. And on Tuesday, the trade got triggered, right? On Wednesday, it gave secondary opportunities. And then on Thursday, Thursday morning or Wednesday night, it actually rolled down and hit initial targets. And what happens is when a trader sees that, a trader that's not involved in the trade, that's maybe waiting or nervous or for some reason just didn't take it, when they see a group of others excited, happy about a winning trade, they kind of get jealous. They feel left out, like, man, I was watching that. I wish I was involved. George made money. Cody made money. Chris made money. How come I'm not making money? And that kind of stirs up the emotion and puts you in the risk of revenge trading or emotional trading. And what I mean by that is that they see everyone else making money and they just want to get involved. And when we come into the live room and we talk about, hey, here's another opportunity to get involved in this trade, they've kind of already made their mind up, like, I'm going to do it no matter what because I want to join the party. And what we're going to do here in this third session is talk a little bit about the risk. I'm going to share with you a personal story as well, but a little bit about the risk of rushing into a trade and not following your rules and how that's hurt me in the past. So pay attention to that. What else do we want to talk about? I got some notes here on my remarkable tablet. Yeah, I think that's about it. How mistakes will kill you. I think I cut out the rest of it. So enjoy this last part, and I'll see you guys at the very end.
Man, it says today's London session was really amazing. Jason, sir, went through wealth management and really taught us important things. Nice. That's what I love to hear. Yes, I believe Jason's looking at this as well for slightly same reason, just different technique. Yeah, I saw that it was live on the Facebook. You guys remember when it was called the Facebook? So anyway, what we had here was a double top entry. Boom. We had the retest of structure yesterday up here, and we had the breakdown looking for a potential 2618 trade. Now, the second chance entry would have been right here yesterday. I don't know if any of you guys got involved, but we did hit that. And then what ensued after that? what did the market do? Put in a, if I copy and paste this bad boy, come on. Put in a 1-to-1 measure move. That 1-to-1 measure move brought us down right to our target level, right above this little structure hump right here. And then we started to retrace. Now, we've started to retrace, we started to pull back. And the question is, where are we pulling back to? Or where have we pulled back to? Yep, previous structure. Look left, structure leaves clues. Again, it's a really recent level of structure. We had 2 levels of support right here. This is our previous outside return. We know that if this level is violated, should we be interested in shorts? A little structure swap here as well. We just take a resistance, support, support, support. No. So, as I looked at this level this morning, now I'm still shooting for target 2, so I'm not looking for any type of, I'm already in the trade still, so I'm not concerned with entering again. But we look at our candlestick here, right? We're testing this previous level. This is where I would look for your next shorting opportunity, right? And you can set yourself in a situation, set yourself up in a situation where you get an entry up here. If you're aggressive, you can put stops right above this level. You can put your targets at a retest of structure lows, and even still make a play. I'll make this a different color so you guys can see it. Even still make a play for that extension lower for your secondary targets. Now, it's not as great of an opportunity because it is the second chance. You guys know how I feel about second chances. The first chance to do something is always the best chance. The second chance gets a little bit more risky. The third chance gets a little bit more risky. The fourth chance gets even more risky. But you still set yourself up with a good enough risk reward where I would say it's worth taking the risk if you can have that shorter risk reward here. And again, first target's down here. My secondary targets, if I just bring these up for you, you can see are right down here at about 65.03, right above that 65 even handle. So even if you're taking secondary targets on this trade, you're looking at a secondary profit level that looks something like this, with a very small risk. And again, if you want to be more risky, you can have the original stop loss that we talked about earlier and just place them above these highs. This is going to be the safest area to put it in. But again, in this type of situation, this type of rotation, the fact that we've already come down to the initial level that we thought we'd retrace to, again, that just makes it a riskier situation to get that move again. And my philosophy is this: the riskier the situation I'm in, the smaller the risk I want to take. So I'm willing to take a chance on it if I can get a good risk reward, but I'm not willing to risk a lot for a situation that is, right? So, but again, that's my philosophy. You can certainly make the risk reward work, still getting it above these triple top highs here. So that's New Zealand dollar again. It looked like we were going to have a higher high, higher close, excuse me, a lower low, lower close as we started our session, but we are not. We still have 20 minutes before this candle closes, so I would keep an eye on it. What am I doing here? Get this off here. I would keep an eye on it and look for a potential opportunity. Jamie says, does the fact that it's a deeper pullback mean that the bulls are in control? No. The deeper the pullback, the weaker the trend. The shorter the pullback, the stronger the trend. The longer the extension, the stronger the trend. The shorter the extension, the weaker the trend. Doesn't mean the bulls are in control, though. What would need to happen for us to say that the buyers are in control? Sorry, Kevin had a question too, so I'll go back to that as well. What would we need to see a violation? A violation of structure would tell us that the buyers are in control. All the deeper pullback tells me is that there's less conviction in the move. And hence why I said earlier, right? Riskier setup, right? We see on our first pullback here, was this a shallow or a deep pullback? Shallow pullback, equal extension. Deeper pullback shows that there's not as much momentum in that bearish move as there was before. Because if so, we would have saw we would have saw probably move a hold right here if the sellers were really in control, a hold right here, and a continuation down. But it doesn't mean that the bulls are in control. So, and that's tough. It's tough. One of the big dilemmas if you're gonna do, and this is, I'm not a true trend trader. I teach you guys trend continuation techniques. But here's a good part. Here's a good lesson on. You know how we always talk about there's a give and a take. I'm sure you guys have heard me say that before, right? There's a give and a take. So here's something to mess with your minds on a Thursday morning, right? So if we're trend continuation traders, right, we're looking to hop on the bearish trend. As trend continuation traders, in order to project a strong trend, as we mentioned, a strong continuation, we want to see a shallow pullback, correct? Now let me ask you this, where's the safest place to put stops? Yeah. So what does a shallow pullback give us in terms of risk reward? If you want to be in the safest place, you don't have to. And this would be one of those instances where I say, hey, you take multiple shots with a small risk, and it could still be worth your while. And that's how a true trend following trader does it. They just take multiple jabs at it with small risk, right? But let's just say you're someone that doesn't want to do that. Psychologically, you can't deal with being wrong 3 times in order to be right 1 time. So you want to take one trade and have the safest risk. Well, a shallow pullback, which is going to give you the sign of a stronger trend, a stronger chance of your trend continuation trend, is going to give you more risk. Now, a lot of you guys like smaller risk rewards, right? So a deeper retracement here is going to give you a much smaller risk reward, right? So you're happy, or much smaller risk, I should say. So you're happy about that. However, what did we just say that a deeper retracement means? A weaker trend. So you see kind of the dilemma. There's a give and a take, right? Isn't it weird, right? You want both. How come we can't have a strong trend and a small risk reward? And you can. You can. Because you would do something like this, right? You would take a shot here, maybe put a stop loss here. Boom. You get stopped out, fire it again here, take a stop loss here, right? Kind of like what we did with dollar Canada last week. Now, there's still a give and a take to anything, right? This is good because it gives you a chance to get into that strong trend with a very small risk. However, what's the give? What do you have to give up? Or what do you have to sacrifice, I would say? Think. I just mentioned it. Nope, not risk reward, not more risk, because you're going to end up taking the same or less risk. You're just taking it in different chunks. Think about the thing that often stops traders from being successful. Psychology, right? Because let me ask you guys this. How many of you guys have lost a trade and have been frustrated? How many of you guys have lost 2 trades and have been frustrated? If you're going to be a trend following trader, and I would recommend reading a book on any of the books about the turtle traders. I personally like Way of the Turtle by Curtis Faith. That was a good one. But you have to be willing to enter a trade, lose, and essentially enter the same type of trade again. So it's like you're doing the same thing twice. And we all know about recency bias, right? What's the first thing that's on your mind after you lose the first trade? Right? You're still thinking about that loss. And it seems kind of crazy. I'm like, George, I know you just lost, but I need you to do it again. And George is probably sitting back like, yeah, all right. Fool me once, shame on me. Fool me twice. Or fool me once, shame on you. Fool me twice, shame on me. Right? But that's the mentality that it takes. And if you look at some of those turtle traders, I remember Curtis saying that, there were times where he had to take 17 losses in a row to catch one winner. Now, I'm not saying you need to be that extreme, but that's the point is you have to be willing to take a hit, fire back, take a hit, fire back. And that takes a lot of mental discipline. And that's something that most new traders don't have. So there's always something. There's always something being sacrificed. And that's the game of trading, guys. That's the game of trading. Rick says a non-trading book that talks about this is Ego is the Enemy. Nice. Questions on the pound yen. New Zealand dollar did not give us our lower low, lower close. So tracking Kiwi. Why are you up here? Get out of here, price. I hate watching price. Gosh. Or P&L. You did not get your lower low, lower close. So if you're looking for that, can you enter? No, you have to wait. And some of you are saying, oh, Keel, are you telling me I just waited an hour for a lower low, lower close? It didn't happen, and now I have to wait another hour? That's what the rules say. Well, can I just, it looks like it's going bearish right now. Can I just enter bearish? And here's the question you have. And I learned this valuable lesson by making my fair share of donations to the market, right? Let me tell you guys a story. So I've had trades like this where I'm supposed to be waiting. This is the undisciplined me. I'm supposed to be waiting for this signal, whatever the signal is. I think back in the day for me it was like double tops. And I'm waiting for it. I need this double top. Or let's use this example. I need this lower low, lower close to happen so I can take the trade. It's like 8:30 and I'm like, okay, I got to watch it for 30 minutes. 30 minutes. It's bouncing up and down. It looks like it's going up. It looks like it's going down. And then within the last 10 minutes, right, the markets usually move a lot within the last 5 minutes of a major close. Last 5 minutes, it doesn't give me what I want. And I'm just like, I just wasted an hour of my life watching it, doing this and that. And then I see this red candle form, and what do you think I would do? Ooh, the move's getting away from me. Akil always said, right? Good moves don't last. Right? Just like real estate, good moves don't last. And I jump in. I'd be all excited. And then I'd come back an hour later, and guess what I would see an hour later? Something like this, right? A bullish candle. Now, for Cody, who comes in after the hour, who looks at this, who's waiting for his lower low, lower close, sees this big bullish candle that violates our previous level of structure, what does this do to Cody's trading opportunity? It invalidates it, right? So Cody never takes a trade. But Akil, who lacked patience and discipline, now I'm involved in a short trade that's going against me that I shouldn't be in the first place. Right? Wasting money. And then, of course, the story always gets worse, right? Because now I'm in this trade that I'm not going to be in, so I don't have any rules for what I'm doing. My stops are up here somewhere. I see it getting closer to my stops, and what's the first thing I say to myself? I should get out the trade, right? The first thing I say to myself is, okay, I got to wait for it to come back. I got to wait for it to come back. I know this was the short stop right here, but the safest stop is right up here, right? So I move my stops up in hopes, right? Keyword hopes, that I'll give the market enough breathing room to go back down, because what goes up must come down, right? Which is true. I always believe that. What goes up must come down. What goes down must go up. Reality is you can go broke before it reverses. Right? And long story short, it goes up, right? My original trade, right? Original trade wouldn't have been in. So my risk was what? 0. Right? Original trade shouldn't have been in it. Risk was 0. All right? My after, we're going to call this the after F up, right? The after F up trade, right? My risk was, let's say I got involved right here. 65.71. Let's say my stop loss was what? 91. Let's say my risk was 20. Now, my super emotional scare trade is up here. Of course, price goes up and stops me out. Now I risked $40 pips. You see how it progressively gets worse? See how it progressively gets worse? Yeah. By just following the rules, zero risk. Yep. Shooting myself in the foot. And it doesn't seem like much, right? But imagine that you do this, let's not even say once a week. No, let's say once a week. You do this once a week, right? Let's say you average you shoot yourself in the foot for 50 pips once a week. How many pips is that a month? How many pips is that a year? $2,400 pips a year. Let me ask you this. How many pips are you guys making in a year? Right? In reality, are you guys making 10,000 pips a year? No, you're probably making a couple thousand pips a year, right? I would say you're probably making anywhere between 1,500 and 4,000 pips a year. Does that sound about right? And you can even say based on your back testing and whatnot. I know it's going to be different per person, but you're probably making about that much. You realize you just gave back more or half of your profit just by making mistakes? You ever put it in that perspective? So if you want the real shortcut to making money in the market, you want the real get-rich-quick scheme, right? You want the real secret strategy of increasing your pips? You guys want it? Give me a yes. Give it to me right now. There we go. Stop effing up. You just made 2,000 pips by stopping the dumb stuff. Tell you, once I made that change in my trading, where I found out what the secret to success was, my whole goal was just don't do dumb stuff, Akil. Don't do dumb stuff. I don't know how many guys are any NFL football fans out there? You guys familiar with the Jacksonville Jaguars? Last year's Jacksonville team? Best defense in the NFL? Power running back? Quarterback? Not the greatest quarterback in the world, right? Until the playoffs, he did really good in the playoffs, but throughout the regular season, their whole goal was to run the ball and play good defense. And they told their quarterback one thing: just don't do dumb stuff. Just don't throw it to the other team, okay? You don't have to complete it to your own players. Every once in a while will be nice. Just don't throw it to the other team. Don't fumble it. Just hike it and give it to the running back. And they came very close to making a Super Bowl. Probably should have made a Super Bowl.
So if there's one takeaway I want you guys to get from this video, it's the importance of treating your trading like a business, the importance of consistency, having that ritual, that routine of looking at the markets the same way at the same time each and every day. And as you guys saw in the video, the initial analysis never changes. We just build upon it throughout the week. And for you guys that have that pre-market checklist that I gave you, by the way, if you want it for free, I'll throw a link in below this video. You can go and grab it. If you have that pre-market checklist, that's an easy way to stay organized. So use it, fill it out each and every day. I know it can take an extra 5 minutes, but is that extra 5 minutes worth it if you can find a good trading opportunity? I think so. In my experience of trading and coaching traders, one of the main differences that I've seen between consistently profitable traders and consistently struggling traders is their organization. Consistently profitable traders do everything they need to do to prepare themselves to take the trade. And sometimes the trade never happens and they don't get the opportunity, but when it does, they don't miss it. Consistently struggling traders, those are the traders that often come in, they see the trade late, they say, oh, I coulda, shoulda, woulda, was supposed to be in that, but for some reason they miss it. And it's cute at first, but over time, it's really costing you money, and it puts you at risk of emotionally trading like we talked about in the previous section. So that's what I got for you guys today. Remember, we do have our Trade to Measure live event coming up next week, October 30th. This is an event ran by you guys, meaning that when you sign up, you get to ask a question. We're compiling all your questions, and that's what we're going to teach you during the 3-day event. So if you have any questions about anything you just saw or anything in trading in general that you'd like us to discuss during the event, make sure you sign up, make sure you type it in. We're probably going to close that down in a little bit just so we can start kind of figuring out what we want to talk about. But if you do attend or if you watch the recording of it, there's a good chance that you'll have your question answered. So until next time, guys, plan your trade, trade your plan. As always, do me a favor. I know it's a long video, but take one more second out of your day to hit that like button. Take one more second out of your day to leave me a comment, and take one more second out of your day to share this across social media. It is a big help. Sometimes these videos are kind of more like work than pleasure. But each and every time I see a positive review, a positive comment for you guys, it kind of gives me the motivation to wake up 6 o'clock on a Saturday morning and start recording this for you. So keep it up. I love it. Keep supporting the podcast, and I hope you guys have a great weekend.